bit about your company
Sure.
and what it does. But no adverts though.
Okay, I'll try. So my name is Albert Castellana. I'm from close to Barcelona, Tàrrega. My background is in computer science. I got into crypto in 2013. Like basically started pretty much immediately into Ethereum. Started creating a consulting company here in Barcelona, like trying to sell Ethereum technology to companies. Really quickly, I realized that it was very difficult at that point to be doing that. So I joined NEM as one of the founders of the NEM Foundation. I was basically trying to sell, okay, you can access the blockchain through an API. And then, well, eventually I realized that one of the main blockers going forward would be scalability. So I joined Radix as the chief product officer. There, like I started like researching a lot of things around like stable coins and around like how this type of layer one should be used, and eventually DeFi. Basically about a couple years ago, more or less. And then since then, like one of the after a lot of research and like different product development, we realized that there was something was missing in this market, which is that right now there is a massive competition between staking and DeFi, right? So staking is fundamental for the industry in order to secure the networks. At the same time, DeFi is growing like crazy the last few months and essentially year, right? But at the same time, users have to choose. Do I do one or do I do the other? Well, actually, what the users want is just better yields. They want to be able to do more with their tokens, right? So what essentially we do is we allow them to participate in DeFi basically by kind of creating like wrapped staked assets that like, for example, the first one will be Zcoin. So Zcoin, you can basically purchase some staked Zcoin from us and then use those staked Zcoin on DeFi. Right, you can kind of borrow against them. You can provide liquidity for them, like all the different things that we're seeing on DeFi. You'll be able to do it for the different layer ones that are kind of, integrated onto the Stakeout platform.
Brilliant. Okay, and we'll get a little bit more into staking and DeFi and AMMS and liquidity farming and all that sort of good stuff in a moment, if that's okay. But Dotan, we've gone from the sublime to the ridiculous, or the ridiculous to the sublime. And you actually work with a very old fuddy-duddy thing called the London Stock Exchange, don't you?
Indeed.
So can you tell us a little bit more about what are you doing and where you see the traditional market there, where that is playing at the moment? Some of your thoughts there.
Sure. Yeah. So, hi everyone. So my role is very much in co-steering emerging technology and innovation at the London Stock Exchange Group. We're really focusing on DLT as a major pillar of those technologies, and we have a number of initiatives internally that we're kind of pushing and driving that really focus in on that. A lot of our kind of where we're putting our attention is really around digital assets, and that's specifically within the context of digital securities, namely kind of digital versions of equities, tokenized versions of equities or bonds, given that that's very much our bread and butter as an organization. In terms of kind of where we see, the landscape going and, looking around and understanding what's going on, clearly in the institutional space, there is a lot of interest, both on the crypto side, but more so in this sphere of digitizing securities. And I think it really does fall into the broader wave of digital transformation, but really it's around systemizing and automating a lot of the commercial activities that have been going on in the financial market space for a very long time, that involve multiple participants, that are very manual and paper based, and have been since this industry emerged. But DLT has really brought a new opportunity to digitize a lot of those workflows, digitize those processes, and all of that is orientated around the value of having these assets fundamentally represented in digital form through tokenization across the entire life cycle. So it's really around that.
Brilliant. And what were you doing before you joined the London Stock Exchange? You're too young to be a blue button.
So I've been involved in and out of the financial service space for a long time. I've been in specifically the DLT space for about 5 years. Prior to my current role, I was involved across 2 startups. One was one of the earlier digital game asset DLT projects called Ownage, and then after that I was involved in a cryptocurrency exchange platform called BlockX. We also had a tokenized bond issuance platform in the FCA Innovation Sandbox last year. That also the year before, 2018, it was kind of going through the throes. So
which one was that?
That was BlockX.
BlockX. Brilliant. Great. And Ruben, you've joined us from Zcoin or Zcoin?
Zcoin, that's right.
Zcoin. Could you tell us a little bit So interesting in what were you doing before you got involved in sort of this sector, and perhaps a little bit of background about Zcoin and what it does.
Sure. So prior to joining Zcoin in like 2016, I mean, I've always been involved in the cryptocurrency space since about 2013 or so, but I was a lawyer for 10 years, doing a lot of work for the government in building like institutional frameworks. The last work I did was about like drafting laws for drainage. So it's quite a rapid departure from what I originally did. But in 2007, I actually started a VPN company. You know, I am from Malaysia, so we have a lot of censorship issues. And that's kind of how I got into the whole privacy space, and I started a VPN company then. And I guess Zcoin is a privacy-focused cryptocurrency. We launched in 2016. You know, we basically allow people to destroy their coins and redeem them for brand new ones with no previous transaction history. Because we see that one of the, I guess, the original pillars of cryptocurrency was to be, you know, above any form of control, and we think privacy is a very important component in that, not just for like, you know, evading money or money laundering, all that stuff, but as a basic privacy human right. So, yep, that's what we do.
Brilliant. Okay, so what we've been asked to look at and discuss this morning or this afternoon, depending on your time zone, is investing in digital assets, an unconditional financial freedom, or a minefield for unqualified investors. So what I'd like to do is first of all ask Louis. We had a couple of exchange emails before the panel, and I was interested in one of the topics that you said that Binance feel very strongly about. Apart from obviously being better than Coinbase and Huobi and all those other sort of, you know, Johnny come lately exchanges, is the whole thing about education. And it was interesting to see in the application to the Hong Kong Stock Exchange from Ant Group, for those that have seen it, there was a lot of importance attached to education in Ant's prospectus. And you've kind of got to listen to what Ant is saying, because they've already got 900 million clients. And on the back of their IPO, which I bet, Dotan, you're a bit miffed, you'd quite like to have done that IPO, but they've kept it in Hong Kong and Shanghai, because they're going to raise $35 billion. So can you perhaps explain a little bit, Louis, why Binance so sort of interested and supportive of education in relation to today's topic?
Well, actually, the freedom of investment and the freedom of money comes with a responsibility, and comes with a responsibility for the investors or the users of this technology. So the decentralized space requires some knowledge for people to understand it and to be able to use it. And especially because all the technology is always quite new and the space keeps evolving constantly. So the past year, we've seen like the DeFi space growing very, very rapidly. What we try in Binance is we have like the Binance Academy, where we teach people and where people can find a source of guides and how-tos into the cryptocurrency and blockchain space. So basically we teach from the very, very basics. So how can you get like your first wallet, how to keep safe your private keys or the mnemonic seed, so that you must understand that the responsibility of keeping hold of your funds is only you and no one else if you keep them in your own wallet and you interact, for example, with smart contracts with a wallet like Trust Wallet, for example. So basically, we feel that we must educate our users so that they have the knowledge to be able not only to use the technology, but to use all of the applications and be able to invest, use wallets, make payments, work with DeFi protocols, join liquidity pool. So this is very, very important in our side. And also we think that the users should make their own research always. So this freedom that allows everyone to invest like from very, very little amounts to very big amounts into these liquidity pools or into any token in ICO or through an exchange, people must really understand what they are investing in. They must do their research in order to find about the team, the project, the background of everyone, and basically how to use it. No? And this is something that we are very, very concerned and that we try to push strongly across every country.
Okay, but Louis, if you like, they're all fine words, but it's ever so difficult to actually really find, if you like, sort the wheat from the chaff, from, you know, what is fake news, what is just marketing spin. A lot of the information that's out there, typically on the web, you can't talk to anyone. Very rarely do you see there's a phone number to actually double check what someone's saying, and statements are made. And, you know, we have the classic recently with the old sushi chef who, you know, snaffled up $14 million worth of, you know, Ethereum tokens in a so-called decentralized environment. So in theory, no one should be able to get access to it. And then he was so guilty, he handed it all back, luckily for investors. So how do we do our research when it's very difficult? There's no real regulatory authority. There's no one overseeing, you know, there's no one like the London Stock Exchange says, well, look, if you don't behave yourself, they will take away your license. So how do we sort of solve that conundrum in the crypto space?
Well, basically, you first need to understand the fundamentals of everything. So first of all, you need to know the basics about blockchain technology. If you're investing in a liquidity pool, how does it work? How does it work? A smart contract. So this is like the very, very basic knowledge that you have to have. You do not need to understand it in full detail, but at least get to know the basics so you know where you are entering, the space you are entering. Once you know this and you want to invest in a project, you should do the research maybe about the team project, the project that are deploying this, the team that are deploying this project. So you have to find a little bit about the background of each of the individual members of the team. In the blockchain space, there are also huge communities always backing these projects and discussing. So you can find a lot in Telegram groups. So it's something that it is very important to see how the project evolves. It is very important to see the development stage of each project. So sometimes people get lost with the fear of missing an opportunity, and they just simply throw money and funds into a project without really starting to do their own research or anything, just followed by this FOMO. So basically, there are a lot of aspects that you can check to see if a project is good or not. But at the end of the day, in this very very early stages of this technology and the DeFi projects, it's very difficult to be 100% sure. So a user must understand the risks when they are investing in this kind of project. So it's not the same as buying Bitcoin or buying BNB with a team like Binance behind, or investing in sushi that you actually do not know who is behind. Not only who is behind, because this is like very traditional in the blockchain space, like Bitcoin with Satoshi was like the very first thing, but everyone can audit the code. It has a 10 years background behind. And so people can fully understand and see many things around it. So basically, you can find many alert signs on projects that could go wrong, but you always have the risk when investing in this. So a high return involves a high risk, and depending on the kind of investors that we are, we should take the approach or just leave the opportunity pass.
Okay, brilliant. And Albert, you're nodding at some of that. And, you know, you've already thrown in all sorts of gobbledygook like staking and good old DeFi. How does Stakehound do anything to try and educate and help, not necessarily your followers, because obviously they're your champions and obviously they like what you're doing, but how do you attract new people into your world? Because yours is quite specialist, isn't it?
Yeah, I mean, there's quite a few thoughts there. First, like coming back to what Luis said, I mean, I completely agree with that. I think everyone should be doing their own research. That's key. At the same time, like there's some initiatives, like, you know, like a couple of weeks ago, essentially, we set up the Catalan Blockchain Center, for example, which is going to try to be kind of educating people here in Catalonia about, like, you know, what blockchain is, what DeFi is, all these different tools, and how it's going to go. I think that initiatives like this are great. More specifically on the Stakehound side of things, we're actually proposing something that is actually not existing right now in the industry, right? Like if I want to be trading something like Zcon, or if it is a representation of it on Ethereum, I can't do that, right? I cannot do that for pretty much anything except for dollars, pretty much, and like a couple like other like fiat currencies and Bitcoin, essentially, right? So we're trying to do that. The way we're approaching this is essentially by leveraging the communities that are already existing. Right, so Zcon already has a community. Yesterday we announced about our partnership with NEM, for example, which is actually right now is like 1.3 billion market cap. They've got tens of thousands of people that are not introduced into DeFi yet, but through this partnership and via the education that we're going to be working with the NEM group in this case, we want to be explaining these people how DeFi works, what the risks are, how to approach it, and try to kind of onboard them into this space, right? At the end of the day, it's like there's always like different stages, right? We've gone through a stage where, you know, it's like the tip of the spear, everything is breaking now because like the tip just completely crashed a little bit. But essentially, all this is just more and more training for people to understand what actually works and what doesn't, right? Like all these different kind of experiments bring a lot of value. And now what we're going to be doing is kind of using those experiments to see how can we actually make it so that, you know, they have actual like real value, right? So for example, one that I'm very interested about is the liquidity farming, right? Or liquidity mining, which is essentially what if anyone can provide liquidity on Uniswap or on any automated market maker so that people can basically trade against them. So that's kind of fundamentally different from an order book based exchange, but it allows anyone to be able to participate and to kind of capitalize from their capital by basically creating a market so that other people can be using and getting those fees, right? So essentially what we're going to do, like one of these learnings, for example, is say, hey, what if we just distribute a percentage of those rewards that we're kind of getting through the staking into the people that are providing liquidity, right? So we're kind of, the answer would be, we want to be working with these different kind of layer one protocol foundations to help them educate their communities and try to focus on the things that we know that are more sustainable, learnings that we're taking from the existing like head of the spear DeFi space.
Right, okay, but if you're giving away something to encourage people to come in, no one has a magic money tree. One of the advantages of DeFi, so decentralized exchange in the decentralized sector, is that by its very nature, you're disintermediating. You're taking away the brokers, the dealers, the market makers, the accountants, the lawyers, or all these other costs, which Dotan is very familiar, and we'll come on to that in a second. But surely if you're giving something to encourage people to come in, that's either reducing the return or is it adding an extra layer of costs? How do you explain that to people perhaps not quite so familiar with it?
Yeah, I like to kind of break that question now, right? Like one of the things is about decentralization, or like what is centralized finance and decentralized finance, right? What's happening right now, the fact is that most of the assets that are being traded on DeFi are actually held somewhere else. Like you know, you've got TrueUSD, you've got USDC, you've got USDT, like Tether. All those assets right now are in a way centralized. So it's already being used as such. There's right now $1 billion locked in WBTC, which is pretty much the same setup as the one we're proposing. The difference is that we are proposing it exclusively for layer one protocols that have staking. Now, staking, it's not just money printing, it has its own value, the value of securing the network, right? So instead of having something like proof of work, when you have to spend a ton of money to set up all the mining gear to be able to mine new blocks, here you're doing that, but instead of creating, like buying the hardware, you're just locking up your assets so that there's some collateral that allows you to kind of vote for what the transactions that are correct are, right? That is being rewarded by issuance of coins, right? And what we're doing is when we stake, we create those tokens that are traded that then can be exchanged at any point in time for the assets that are right now staking, right? In the meantime, they are generating, they are staked, they are providing the service of securing the networks, but the user can just go into Uniswap and buy 1,000 staked Zcoin tomorrow, and when that happens, they can use them. Every single day, they're going to see how the rewards that we are actually on the back end getting from the staking itself are kind of being distributed to them for kind of using the service essentially.
Okay, so bear in mind the title is Unqualified Investor. I'm assuming we got some people that are perhaps not quite familiar with some of this terminology. If I can put it in very, very simplistic terms, I'm sitting on a pot of let's say Tether, and I pass it across to a DeFi exchange, and they give me a version of Tether. Okay, so and then anyone that wants to use my Tether for lending or borrowing, they have to pay a fee, a yield an interest. Yeah. And
On the
some of
DeFi
that will
side.
then come to me because it was my money I've lent them. And some of it.
So there's kind of a mismatch there, right? So on one side, you have the staking side of things, where it's the layer one protocol. So like imagine Zcoin, but then you're going to have Ethereum 2.0, right? So Ethereum 2.0, for example, will have staking, right?
Yep.
What you're going to have to choose. Do you want to have your Ether on your wallet and be able to use it on DeFi? Or do you want to have your Ether staking, where there's like a 1 to 2 years lockup? You have to have 32 Ether at least. You have to be maintaining the node. You can get slashed. All these different things, which are pretty much leading everyone else from this market, right? You will have to have that choice. You will have to do that choice. What we're allowing is, okay, if someone buys us a staked Ether, then we can get that Ether and we can kind of stake it ourselves. Because you have the staked Ether at this point in time, you can just go into Uniswap and trade it, or you can provide liquidity for it, right? And what's going to happen is that when the rewards come in, then you will see that the rewards are kind of jumping over to you on the staked Ether side of things, right? On the wrapped token side of things.
Right. Okay. Cool. It's really simple, isn't it?
Super simple. Easy peasy.
Right, Dotan, come on. You're from the old. Well, I don't think they have sort of feathered quill pens anymore in the stock exchange, but that's quite a lot for someone to take on board, isn't it? As we say, it's a minefield of terminology to try and understand. But I'm intrigued because, you know, having been myself involved in the financial service sector since the mid '80s, one of the things which I have always spoken to my staff about, to journalists, to regulators, is this lack of education. People don't really seem to know what they're doing. And as a result, although caveat emptor, buyer beware, we continue to see scams. We continue to see fines. You know, most recently, we've obviously seen the banks have been accused of sort of money laundering. It could be in excess of a couple of trillion. This is London banks, you know, so-called safe, sophisticated, smart financial centre that London's meant to be. What are the stock exchange doing to actually help on this education thing, rather than using regulation just to protect these investors?
I mean, so specifically, I think to answer the question, it's useful to understand as a business, you know, where we're positioned. You know, we very much serve, you know, the wholesale financial markets and institutional financial markets, right? So as an organization, we don't face off to retail investors, you know, very much for good reason. And I think, you know, when you look at the sophistication of a lot of our clients in terms of their, you know, how they trade and their trading behaviors and how they leverage markets, it's clear that it's not a good place for you know, retail investors to come in, and specifically, I think this plays into, you know, the theme of, you know, is education alone the solution when you look at what's going on in the crypto space and you look at kind of, you know, how people are trading and a lot of the risks that people are exposed to. And I would say that it's one part of the solution, but it's not the only solution. And the reason I say that is because, you know, we've seen examples of people losing, you know, large sums of money, even trading assets that aren't scams. So Bitcoin and Ethereum, just getting, you know, investors who are undereducated. And again, education itself is a moving target. So understanding the fundamentals of the technology may help you, but it doesn't necessarily teach you how other traders who maybe are up to speed on, you know, behavioral dynamics of trading and can essentially follow your uninformed trading strategies and essentially pick you up all day long. It doesn't help you to solve for that, right? So I think in many respects, you know, this is the reason why regulated financial markets today have regulation. This is the reason why regulation is tailored and oriented around market fairness, around solving for the information asymmetries that are inherent in every economic marketplace, and solving for, you know, some of the risks of market manipulation, which again, you know, markets are vulnerable to. And so I think these are the areas in which I think, you know, we need to see more focus and a broader focus, specifically when you look at the kind of crypto markets. You know, the regulatory sphere across Europe at least has started to look at that, right? So if you look at the markets in crypto assets proposal that came out of the EU Commission recently, they're really setting or laying the foundations of a framework. So obviously starting with the, you know, the 5th AML directive and looking at, you know, registration for VASP registration as a starting point, but it's really looking to extend and build upon that to start to, you know, hold these businesses that are underserved, these service providers to account, such that they can start to solve for some of the broader risks that investors are exposed to, that education alone at the individual level cannot solve for.
Yeah, yeah. Well, and you're talking about recent developments. I personally think it's an absolute crying shame that yesterday the FCA came out with an announcement here in the UK that they're effectively going to ban crypto derivatives to retail public. You know, this nanny state attitude. You know, it's as soon as you tell somebody they can't do it, they'll want to do it even more, which I think is a shame. But there's a couple of things I'll come back to second, Dotan. But Ruben, where is Zircoin on this in terms of the concerns that you may have about the, you know, as the title says, the unconditional financial freedom, in the sense that you can just get involved. Is it just a recipe for people just to lose their shirt almost overnight?
I mean, it's tough, right? It's always a balancing act. Like, it's always like, oh yeah, you know, you don't want to lock people out from participating and only allow the rich or the VCs to play in all these games while leaving out the retail. And of course, like, you know, Luis talked a bit about, you know, part of it about the education. But, you know, I mean, let me just use the DeFi space as an example, right? Like, right now, yes, I do think you know, the DeFi space is really interesting, especially with the rise of stuff of automated market makers and all this, you know, decentralized lending platforms. Those are good stuff. Like, those are useful products that people can use without any sort of intermediaries. But there are a lot of, like, I would say, like Ponzi-nomics or money games that kind of power this type of things. And um, like I mean, this is going to be like a bit controversial, and I'm a big fan of Binance, but like, yeah, but you know, it's like listing sushi was very controversial, right? I mean, you know, Binance says that they check who the team is. Well, who the heck is Chef Nomi, right? And at the same time, you know, I felt that like a lot of these U farms, they are basically just complex money games where I'm giving you a valueless token, and then I'm just like pairing it up with some other token with value, and then creating this artificial yield. People look at it and say like, oh, look, it's a 3,000, 4,000% yield per annum. I'm going to go in without realizing. I mean, you see the chats, they're like, oh my God, when I withdraw my liquidity, where's all my Ethereum? Where's all my USDT?
So is it a pyramid scheme? Is it a pyramid scheme?
It is a pyramid scheme.
The whole thing collapses.
Correct. And one thing that they kind of cover, like a lot of these pyramid schemes, is, oh yeah, you know, we're giving you a governance token, right? You know, like this is something you can vote on, and therefore it has value. Like, you know, sometimes, I mean, this is going to be controversial again, like, you know, like Wi-Fi. You know, the owner said that this thing is valueless, and suddenly it's like 22,000 per coin. And do people actually view those voting rights as really like value that much? I think people are just basically speculating. Now, I'm not saying that DeFi is like all money games right now, but a lot of it is. They are very useful tools that are being built, you know, and they are really, I would say, like industry changing. They're really disruptors, you know, like when I use Uniswap, when I use, like, you know, get a decentralized loan on like Bitcoin or even Zcoin or anything like that, that's really powerful. You know, I do that. But when you have all this additional layers of governance, like free governance tokens, as you mentioned, you said, like, you know, where's the yield coming from? You know, there's no money printing tree. But these are effective money printing trees. You know, I'm creating coins out of thin air. I'm giving it to you to provide liquidity. There's no value. And suddenly, because of automated market makers, I can create stuff that has value, at least for a short while. So I know it's a bit of a convoluted answer.
Do you remember the story as a child, the little story that the emperor has no clothes, and everyone had to say, what a lovely emperor. And then suddenly someone said, but Daddy, he hasn't got any clothes. And everyone was horrified. Is that a similar analogy that we have then in this sort of space?
Well, it is, but at the same time, I feel like when you talk about education, it's just so many different aspects, right? Yeah, like, oh yeah, how to secure my funds. That's just one aspect, but it doesn't cover like, okay, impermanent loss. Even if you understand impermanent loss, then you have to look at like the token metrics, right? Like you have tokens that have like 30% to ecosystem, 20% for exchange listings, and maybe like 5% to the public, right? And do people actually understand this? No, they feel like, oh, the price goes up, supply is low, very, very basic level stuff. These are very tough concepts that I don't think you can just solve by saying, oh yeah, go read yourself, caveat emptor. I don't have a solution for that, but it's it's as probably said, Doughton said, there are controls maybe that make sense, but hey, look, like Nasdaq, listed like Luckin Coffee, was it? And then look at where it is, right? It's very similar as well, but I guess some controls may be required. Yeah.
Well, and I think to be fair, it's good to see, someone like Binance, one of the industry leaders putting time and money behind education. It's interesting because here at Team Blockchain, we write a weekly analysis. And this is written on behalf of corporate brokers, accountants, lawyers, business schools, where what we're doing, we're trying to look at what's happening in the blockchain and digital asset space. And I was very intrigued back in the summer. We were looking at what was happening with the London Stock Exchange. And Doughton, can you just shed a bit of light on, you've issued 169 CDOL codes to cryptocurrencies. Can you explain why a CDOL code is important? And I bet you won't, Tam, but when are you going to start trading Bitcoin?
So
we are being recorded. So if you spill
we've been heavily involved in the formation and specification of CDOL standards. It is very much a mechanism that is useful for listings as part of the listing process, essentially, of securities, right? And specifically for identification of these securities with respect to data specifically.
hang on, Doughton. Keep this really simple. If I want to come and play on your exchange and buy and sell BP shares, L'Oreal shares, or a bond, I need a CDOL code.
A CDOL, yeah. There are other.
It's a bit like having chips in the casino. I can watch, but I can't play. But if I want to play, I need a CDOL code for an asset. You can't trade
generally
without CDOL code.
Again, there are other identifiers that you can be issued outside of CDOLs, but CDOL or any of the other recognized identifiers, yes, essentially that's how it works.
So you've issued 169 CDOL codes for a bunch of dodgy cryptos.
I mean, so
worth 300 billion. Come on.
Obviously, we don't own the standards, and it's very much providing a framework for registration such that assets can apply to essentially have CDOL codes created on their behalf, specifically for listing. So, and this is relevant from a data perspective when you look at our ISD business and you look at index listings and cryptocurrency indices. Is very much a growing space at the moment. We haven't listed any yet, but I would imagine at least over the next couple of years you'll start to see some traction there too. Absolutely. So I think at least on the crypto side of things, it's about trying to build a framework to make that possible to bring some of these assets into managed portfolios of tradable indices essentially, and potentially in the longer term ETFs, right?
So poor old crypto exchanges like Binance, they've got the dreaded atomic swaps, and you don't really need an exchange for that, but that hasn't really taken off. Then you've got DeFi. You've got Uniswap was the second biggest volume exchange in September, I believe, after Binance. So they're already taking a big chunk of volume. Surely if you saw someone like London Stock Exchange come in, you could blow these exchanges out the water. You could actually start trading a whole myriad of cryptos, and we could have all sorts of sort of sushi chefs wandering around the city of London and various different places, cooking up the book. Not cooking the books. Trading, and you don't necessarily be centralized. You could jump in, couldn't you?
I think again, it's important to recognize, as a business, as I mentioned earlier, our bread and butter is really around, securities. We are a business, focused on providing financial markets infrastructure for the provision of capital, and capital comes in many forms. And really, today, we recognize financial instruments as registered as forms of capital in the form of securities, and tokenization is a mechanism that allows those things to increase their mobility, to potentially increase liquidity through new forms of financial markets infrastructure that are entirely technology centric. And that's really where we're focusing our attention. I think on the crypto side, the space is wide open, it's very nascent. A lot of these assets, in many respects, it's very unclear what exact taxonomy it falls into, right, for a lot of them. It's also very unclear what a lot of the legal structuring around these assets actually is. If you're investing in a lot of these crypto tokens, what are you actually buying? What rights and obligations does it actually confer to you as an investor? That's very unclear. And a lot of it seems to be orientated today around specifically what the provisions that technology and underneath it enable.
Yeah.
But that's about it. And so I think for us, that may be useful and viable and interesting for retail investors. But for professional investors, there's a lot more work to do there to make a lot of these assets viable as an investable asset class.
But just before I move on to one of our other panel members, I see the potentially for digital assets, and now I make quite a distinction between crypto assets and digital assets.
Yeah.
I see there's a huge opportunity potentially for the likes of London Stock Exchange or NASDAQ or any of the other international exchanges around the world to actually disintermediate your core clients and enable the retail investors to reconnect back with different traditional exchanges potentially with this new technology. Really quite exciting, unless you're a stockbroker, but then not many people deal with their stockbrokers in any case these days. But that's perhaps another issue. Ruben, I'd like to just come back to you on some of the stuff you're doing with Zircoin. And sorry to put you on the spot, but is Zircoin Sharia compliant?
That's a minefield. I'm not an Islamic expert, but I think we are as Sharia compliant as other, like as Sharia compliant as Bitcoin, right? It depends. Yeah, I don't dare to say that we are Sharia compliant, but we are as Sharia compliant as Bitcoin is.
Okay. Yeah, the only reason I mention it is because obviously that's a 2.4 trillion market, which a number of the if you like certain numbers of the decentralized products are actually potentially Sharia compliant. Now, whether that's been done by design or by default, I think that represents a really interesting opportunity, because many people, certainly in the crypto space, have been yakking on about helping the unbanked because there's 1.7 billion and making it much more inclusive. Whereas certainly in the West, many of the financial service companies haven't necessarily designed products and services which are Sharia compliant, which just seems crazy to me because it's such an opportunity.
Yeah, to be fair, I mean, like in Malaysia, where we are innovators of like a lot of this Islamic financial products, like a lot of it is even like questionable. Like even Sharia compliance is dependent on jurisdiction. We have loans and certain kinds of contracts that are only recognized in Malaysia. But I mean, a bit out of scope of this topic, but yeah, I did a lot of this Islamic finance stuff, and some of it was just like, look, call a spade, right? Like this is just a very fancy way of granting a loan, but not calling it a loan. I mean, yeah, stone me for it, but that is what it is. So I don't know whether you would call it Sharia compliant. I mean, after all, we're all dealing with fiat, and which is created out of nothing, and that is not Sharia compliant to begin with. So
absolutely.
Yeah.
Absolutely. Okay, so Louis, can I just come back to where are you seeing growth in terms of the types, or geographically, and also in terms of the types of products and services, as we're seeing potentially more unqualified investors, because there's still relatively small number of people that have got the experience of trading these assets, whether it's crypto or whether it's asset-backed digital assets. So are you picking up any trends?
Yes, well, basically at the beginning, like trading assets and cryptocurrencies were more for traders and speculators investing on the price going up or down of Bitcoin or other of the assets. But we are seeing, as for example, in South America, Latin America, there are many countries with hyperinflation. So we are starting to see the real use cases of crypto users. So the type of crypto user is changing, and for the best. And I mean, it's like the real use cases for what crypto is, it's conceived. So people are using it, for example, as a safe asset. So if you live, for example, in Venezuela or Argentina, and your pesos are constantly, or Bolivar is going down every day in your bank account, you can see that holding Bitcoin, even though it fluctuates, it will be a safer asset than your fiat currencies. And we are starting to see this trend across Europe also. So some smaller savers are starting to see that the economy is starting to crash a little bit with all of the pandemic situation. Especially in Spain, we are hitting very, very hard on this. And we see how people are starting to use these kind of services, not only as an investment, but as a safe haven for this, for their funds. And they can also use like DeFi protocols or staking to get a little bit more of interest, passive interest generated from their cryptocurrencies investments, which is actually quite good to see how things are evolving. It's a very interesting time for cryptocurrencies. And I think that we will see an adoption growth in the following year due to the global economic situation right now.
So that's interesting. So you've seen, as a result of COVID-19, an increased interest in Spain, where obviously you're based.
Not only in Spain, but all across the world. So we are seeing that there's a growth in the cryptocurrency space. Some push maybe by the DeFi protocols. Others, we've seen the users, the number of wallets for Bitcoin has increased dramatically. Also, the number of traders in exchanges. So everything is going up.
Right. And Albert, you know, where do you see some of the opportunities for investors then? Is DeFi here to stay, in your opinion, or is it just going to prove to be a bit of a flash in the pan, and we'll look back in a couple of years' time and say, nah, that really was just an experiment?
I mean, to me, it's clearly here to stay, and it's kind of already been proven to be able to do that, right? Essentially, over the last 2 months, we've seen how kind of value locked in staking has gone from about $2 billion to $14 billion in 2 months, essentially. Now, I'm not saying that there's like not a lot of kind of like Ruben was saying about a lot of Ponzi's right now. That is the case. At the same time, all of this kind of experimentation, it just creates new type of products, some of which will be completely like discarded, some of which will be kind of quintessential for the new economy, essentially, right? The way I see this is that in the next year, we're going to see how some of these experiments actually start to be used for, you know, real applications. I mean, there's quite a few of these that are no longer experiments, right? Like it's very hard for me to get Ether and to get a loan to borrow against my Ether right now, right? I can't go to the bank and do that. But now on DeFi, I can easily do that just with a couple clicks, right? Another thing that's important as well is obviously like the user interfaces. What we're seeing as well is a lot of interfaces are trying to be in the middle, just saying, hey, you know, just deposit your dollars in here, and then we're going to be using DeFi and like under the hood, but actually we're going to be giving you that sort of yield, right? So there's multiple applications like this that are happening. So I don't see that most of the users will actually have to be, you know, like, hey, I'm going to click, provide liquidity, click. Like I see more like applications will go directly and kind of do this like in a transparent, like a opaque fashion in this case for the user itself, right? So I think that user experience is going to be improving dramatically. I think that all these experiments, some of them have value, some of them not. The ones that have value will very quickly be adopted. You know, like we've seen a few hiccups kind of this year, right? We saw like in Valentine's Day, there was like this crash, and what happened as well, sorry, in March is this one. Maker lost $5 million, right? Lost with big quotes. There would be like a lot of, you know, fighting here. That is essentially 1%. Like on one of the biggest problematic days for Maker, they lost 1% with big quotes. They actually like recovered it, so on and so forth. But the thing is, we're talking about like a big day, big problematic day, 1% issue, right? So we're saying that, me personally, I have been very, very long time in this industry, understand, like thinking that smart contracts are very complex things to do. It's very easy to find a bug and the whole system to be able to crumble. At the same time, I've been proven that, well, the way that it's being done, this experimentation, the risk is actually quite limited. Yes, we're talking about billions of dollars. It's going like faster and faster every day. But like, you know, most of these things are very locked in things that are quite safe. Like, for example, Maker, which, as I said, on a very bad day, it's just lost that much, right? So I feel like, yeah, it's just proving it's very, very resilient. It hasn't lost any big percentage of the whole value locked. It is proving to have utility that before we didn't have. Things that are completely mind-blowing, as I said before, like the liquidity providing, for example. To me, that is real democratization of financial products. It's something that until now we couldn't potentially do in any way, right? And this allows anyone, like guys in Venezuela, to just come in and like provide some liquidity and become you know, the market themselves. Like, be providing liquidity means that you're enabling these trades, you're getting those fees. It's a revenue model for them, right? So I see that some of these are actually completely new things that are like very important for what's to come.
Yeah, I think you've raised a couple of really interesting points there. First of all, going back to my example of Ant, which is being spun out of Alibaba, probably apart from Dotan, because he knows the Hong Kong Stock Exchange. He's got some old boy, I'm sure, with a bowler hat that can buy him a bucket load. But most of us would find it very, very difficult to actually go and buy shares, forgetting the IPO, but when they're even floated. You know, actually dealing with a traditional stock exchange to actually then go and buy shares in Shanghai or Hong Kong, it's not an easy process. Whereas in the digital asset field, it is much more global. And the other thing you were talking about, you know, yes, I know you've talked about the last couple of months, the growth, but I think we need to bear in mind that things like MakerDAO have been going for several years. In the same way, blockchain technology, it's not in the last 10 years, the essence of blockchain technology has been around since the 70s. So it's not a new technology. But one of the things I'd like to perhaps return to, you mentioned something earlier on, Dotan, about EU legislation or proposals. Would you like to just briefly expand on that a little bit in terms of why you think that's important, and perhaps why that can, again, help unqualified investors and potentially institutional investors?
Yeah, so I think just to expand on this, I mean, so there are a couple of proposals that came out of the EU Commission a couple of weeks ago. So the first and probably most relevant to the crypto space is obviously the markets in crypto assets proposal, and it's really looking at a way to harmonize the service provision of products and services around you know, cryptocurrencies and blockchain technology, specifically with respect to crypto assets. So this will obviously cover, you know, a lot of the large centralized exchanges and other service providers and digital custody providers, etc. And initially, it's really around registration, but I think following on from that, you'll see over the longer term a view of using that as I said, the baseline to start to roll out new regimes or guidance, as well as, you know, just getting regulators better connected to the industry, so they can build deeper relationships with these service providers in this space,
and giving legal clarity.
Yes, exactly. Yeah. And very much just, you know, starting that journey, I think, of maturing the space, right? Maturing, you know, some of the tools and techniques that companies are using around, let's say, for example, you know, regulation of markets, around, you know, KYC and AML, and some of these other factors. And you know, some of those controls and guidance may extend. Some of it may narrow. It's really, you know, it just depends on how things go, really. But it's really around trying not to inhibit innovation, but at the same time, you know, ensuring that, you know, market stability is there, investor protection is there, fairness is there.
But Dotan, I think that's really interesting what you just said there, because one of the 4 tenets of what the EU proposal is actually to encourage innovation.
Yeah.
And yes, the normal things to maintain confidence in markets and to protect investors, that's kind of what the regulators or the business prevention officers always are meant to be doing. But to actually say we're actively going to encourage innovation, I thought that was a really good statement, and really should be encouraging for, you know, this new sector. And it was interesting, this week's Digital Bites, we looked at the lessons that traditional finance sector can possibly learn from DeFi, fun enough, but also what are the lessons DeFi you know, can learn from traditional markets. Because surely we cannot see a situation long term where you have the old paper-based analog system that we have trading, the trillions of bonds and equities and commodities at the moment. And then on the other hand, we have 24-hour real-time information, transparency, lower costs, faster settlement that digital assets can bring. Surely that's, you know, it'll end up being driven by compliance, perversely, whereas at the moment, you know, if you look at what's happened yesterday, the FCA again, it's actually being held back by compliance. But look, Louis, I'm conscious we're coming towards the end of our session. I just wanted to ask your thoughts, and sorry, I haven't asked this before, but I just wanted to ask your thoughts on, do you see there being more demand for funds? And Dotan talked about indices. So obviously we're about to get the FTSE 100 crypto about to be launched for our Christmas stockings. But do you think you're going to see more funds? Or do you think people are fed up with that and they just want to have direct exposure to individual entities and cryptos and digital assets per se?
Well, there's a mixture. At the moment, I think it's more for individual assets, but nevertheless, for example, we created a DeFi fund where we included the most popular DeFi tokens as one asset. So this can be traded in Binance directly. So at the end of the day, I think right now people are used to buy directly Bitcoin or buy directly Ethereum or BNB, but it will grow in the space in the following years, I think. Especially as traditional finance gets into the cryptocurrency space, they will create more of these kind of funds.
And Albert, do you see therefore the opportunity, if I hold an index, I see Bitfinex have just recently launched a derivative based on either the Europe's 50 biggest stocks or Germany's 30 biggest stocks, and it's an index that we're just talking about there, but it's effectively a fund. Do you see me being able to stake investments and funds like that in a similar way that you can stake an individual crypto?
So the way that we do this is we focus kind of on layer ones, but kind of be out of the scope of the question that you're saying, right? There's going to be smart contracts that will allow you to stake funds in some way to be able to do what you're saying. And I think that there will be those cases, right? So where basically like you can have value from kind of staking, like using those assets, right? The way I see it, I'm interested as well on seeing all the different indices that will happen around staking itself and how it can be used. So I can have basically all the different staking tokens, which basically like last month essentially was about like $24 billion worth of assets. All of that you could have an index as well, and that gets gets the yield from that as well. So I would say yes to both, a bit isolated from the stake hunt perspective. We're more focused on how do we enable other layer ones that are like on their isolated islands to participate in this, sea of opportunities.
Okay, and Ruben, again, I apologize, I haven't asked you this before, but I'm going to put you on the spot, and that's around this whole thing. You spoke initially in your introduction about the topic of identity and being able to have anonymity, and that was a key tenet of certainly the crypto. But without decrying the crypto world too much, at the end of the day, it's not even a rounding error. It's 300 odd billion. You compare that to equities and bonds. If we're going to see institutional engagement, surely we've really got to face up to it, and we've got to have some sort of KYC, AML embedded into all of these products if we're going to really get some of the big investors to actually be involved. Do you think that's true, or do you think that's just old hat?
It really depends, right? I mean, I do think, of course, if we just look at the current situation where it's just dominated by the big guys, the financial markets, then yes, maybe we have to do all this KYC stuff and AML. And of course, that's always an important component. But I do think there is a rising awareness among, the average Joe that, perhaps the fiat money that they have is not as valuable as people think. Like, just in the past few years, and no one used to talk about, oh yeah, all this money is printed. Everyone somehow thought that fiat was backed by gold, even if it wasn't for like 20, 30 years. But I feel that as more and more people kind of realize that maybe we do need like an alternative financial system that maybe have less controls in AML KYC, and that takes that takes off. I mean, if we've seen Bitcoin take off and all this sort of stuff, of course, there's regulations around it, but it was not it did not have like KYC inbuilt into it. It was actually meant as like a privacy feature. But because it grew so bigly, regulation had to regulate around it. And that's how I kind of see it, where you have AML and KYC on the conversion points between fiat and between the alternative finance and the real finance world. But at the same time, I don't think it is absolutely necessary for especially like the simple transactions, because there's a fine line between AML, KYC, and like surveillance, which is like what's happening with all this central bank digital currencies like in China or so. So I do think that's not. There will be always a need for KYC and LML to a certain extent, but I guess it is always the devil's in the details, right? To what extent, to what value, is cash dead? I think that's what it is really, right? Is cash doomed to failure, and therefore cryptocurrency also needs AML KYC for every small single transaction as well.
Yeah, in the same sense that I may have to prove to you that I'm of legal age to have a beer, but you don't need to know my date of birth. And that's where perhaps digital identity can help us there. But going to your point about central banks and the printing of money, we've now seen up to the end of August, there is now 3.87 trillion of cash sloshing just around the US economy, which has provoked the Wall Street Journal to say central banks are getting close to issuing their own digital currency. If they do, the dollar might finally face real competition as the world's dominant currency. And it's interesting, probably of all the topics that we've covered in the last 2.5 years of writing Digital Bytes, the one that seems to be very, very popular is the potential decline of the US dollar. Now, this isn't something which is new. This is absolutely 100% totally inevitable. Because if you go back, the last 4 or 5 world reserve currencies have only lasted on average 94 years. So prior to the dollar, we had pound sterling. Prior to that, we had the French franc. Prior to that, we had the Dutch guilder. Prior to that, we had the Portuguese escudo. All of them have lasted on average about 94 years. So, the time is up potentially for the US dollar. The question is, what will replace it? Do you think, in closing, Louis, is it Bitcoin or is it something different?
I would love it would be Bitcoin, but I'm not sure this would happen.
Okay, Albert, is it Bitcoin? We got 1 minute.
A mix of multiple things.
Oh, for goodness sake.
No, like seriously, I don't know which ones, but like a mix of multiple things. I don't think it's going to be so simple anymore.
Dayton?
Certainly not Bitcoin. I think if you're talking about reserve currencies at that scale, the currency acts as a proxy for the economic strength of a sovereign nation. So really, the Chinese yuan or their CBDC, as they push that with a lot of their broader economic initiatives in partnership with other nation states, is probably the biggest competition you're going to see.
All right, Ben, what do you reckon?
Ben, Ruben? Oh, me?
Ruben, sorry.
Yeah, I actually have to agree on Dilton on that. I mean, just for the next one, but I don't think it's going to be Bitcoin. Yeah.
Okay. All right. Well, I'd like to thank you all for your contribution. Really, really interesting. And yeah, I think there's huge opportunities, and we're seeing the current status quo really being shook up. And I think it's there's going to be some really interesting ways. And those that can embrace change, I think, are really set fair. And I think we are going to see more and more direct investors getting involved, which I think is a really encouraging thing. So thank you very much. And if anyone else has got any other queries and questions that have been listening in, then if they can go through the organisers, they can get access to any of our names and addresses. So thank you very much indeed.
Thank you, Johnny. Thank you all.
Thank you.